Hello, everybody. It is Wednesday, October 16th, and it's time for our weekly live event. Hello, Harry. How are you doing today?
I'm spectacular, Pete. How are you?
Things are good. Market is kind of in a holding pattern right now. Our picks have been excellent. I'm going to go over those first. My pick last week was SNOW, and this was the live event right here. I love the fact that the stock was starting to break out of a compression. You can see that when it took out the high from the prior day, the stock rallied up, gosh, I don't know, about 5 or 6 points the next day. It has since settled back down again, but there were some nice opportunities to make money there. I also gave you Oracle. Let's take a look at that. And that was when Harry's power cut out on him.
Yes, that
So
was lovely. And
I
I
hope.
messaged you too late after the event ended saying my pick would have been Apple.
All right, good. We'll take a look at that. That's right. And so Oracle has not done a whole lot of anything. Okay. It's pulling back a little bit right now, along with some of the tech stocks. And we're looking at it last week on the D1 chart. It was just starting to inch through this horizontal resistance. We've got a couple of high plus trend lines that are in the way. The stock tends to be pretty choppy. In other words, it doesn't make straight moves higher. This is a good one to buy dips on. So currently going through a little bit of a dip. And let me take a look at, let's see, over the weekend, I gave you UPST. That was in the Sunday video. And that has been a really nice one. Let's take a look at that 5-minute chart. And so there is the close Sunday. And you can see yesterday put in a really nice day. I mentioned to you, in all fairness, buy dips. Okay. So I did not say chase the open Monday morning. If you had, obviously you made money on it, but I like this stock longer term. And the theme right now is to really be patient, buy dips. The market's not that strong. So I'm going to put up a chart of Apple. And Harry, what did you see in Apple that you liked?
Take a look here. So on Apple, if I can just bring it up here for myself. There we are. Okay. So last Wednesday, what I saw was you had this break of the 50, not a break, sorry, the 50 SMA. The 50 SMA broke way back on September 19th, right? And then it just hung around there in this compression right on that SMA. Briefly falling below it on October 7th, but bouncing right back above it on October 8th. Then comes Wednesday, and you finally see Apple making this move to break out of that compression. So I was looking at Apple forming a new base, finally moving above. It was also hanging around the EMA 15. So this was a purely technical look on the stock of, it just was doing nothing for around a month there and finally had a nice move on that day, was relatively strong to the market. And then I figured, all right, this is where it's going to break. Also, I like those trades where you have support nearby, right? In this case, you have 223.11 back when back last Wednesday was the 50 SMA, which gives you a nice natural stopping point. So whenever you have those trades that have a lot more upside than downside, where, if you took Apple long there and it had a bearish day the next day, broke below the 50 SMA, well, obviously you get out of the trade, right? That's where you go, okay, I'm no longer in this. But if it goes up, well, then you just hold it. You can even add to this is a good position to add to the winner, which is what you would have done with Apple here, right? Particularly on Monday when Apple breaks up again, you could add to that winner there. And it's down today. A lot of tech is down today. ASML certainly didn't help the market in that respect. But I like the trade on a technical basis, and I like the natural stopping point.
A very nice pick. I wish you'd have gotten that one in instead of my Oracle pick. Apple did much better. So yes, right now the market has been creeping higher, but put up a D1 chart, take a quick look at it, and we'll get right to some questions. So please post your questions. We're trying to get to the questions a little bit earlier instead of kind of boring you with the same old, same old. but you can see that we had this nice little horizontal breakout here. That was a week ago, and then we've had a little bit of follow through to it. Monday was actually a bullish trend day. You can see how the market gapped up, and we had a gap and go. Fairly rare at an all-time high, and one that we need to be careful of when we've had a couple of days of strength before that. So let's take a look at Monday's price action, gap up. So in this juncture here, you're not really sure if that gap is going to hold or not. You certainly wouldn't want to chase it because you could reverse sharply, and there's lots of downside as that gap fills. You also start picking up some momentum. So if you get on the wrong side of a trade early here and the rug gets pulled out, not good. So you wait patiently and you get this dip off of the high and support at a VWAP, or excuse me, VWAP. And then there is a bullish engulfing candle off of VWAP. This is a nice entry point for your long positions. You waited patiently, and that was your opportunity. Not here, okay? This time, yes, it worked out, but other times, like yesterday, if you jumped the gun and you got all excited that the market was going to continue to push higher, uh-oh, not good. And you can see these three long spread stack candles that coincided with the ASML earnings release. They announced a day early. They missed their revenues. That put a dark cloud over the entire tech sector. And here are the clues that this is not going to be a bullish day. When the market tried to rally, you can see how this bounce was very short. It wasn't tall. VWAP, WAP, WAP, WAP. Sellers are selling before it even gets to VWAP. They see this as an opportunity to continue to unload. Another attempt falls short of VWAP, and this is kind of when I posted in the chat room. This is likely to be a bearish trend day. Had that heavy selling pressure, a lack of a bounce, can't get above VWAP, and then of course the market pulls in. So choppy back and forth price action in the market.
A couple of questions I want to get to early here. First, a quick one from Avi, or Avi, or XVIE, whatever. When trading tech stocks, wouldn't you refer to QQQ and Q for relative strength, relative weakness instead of SPY? We get asked that a lot. We've run that. We've tried that. Certainly, of course, we've tried it. The correlation to SPY is stronger. SPY, as which is a proxy. When we say the market, we're referring to SPY, right? We're referring to the S&P 500. Obviously, the S&P 500 doesn't. It's 500 stocks. It's not the entire market. But what it is it is the it's kind of like the tide, right? The rising tide raises all ships, lowers all ships. 75% of all stocks will get pulled in the same direction as SPY. You can determine relative strength, relative weakness by whether or not a stock is outperforming or underperforming the movement in SPY proportionally. And with QQQ, while it is a tech-heavy position, what it tends to do is over-represent or underrepresent the relative strength or relative weakness of a tech stock or a stock because it's much more impacted by the weighting of the stock in that index. So SPY really is the best dependent variable, so to speak, to use when you're trying to measure relative strength, relative weakness as a baseline. But yes, we certainly have tried it. We get asked that a lot. Certainly not like we tried it and it worked, but we're just not going to use it. Obviously, if it worked better, it works. I'm not saying it doesn't work. It's just that SPY works better, right? So stick with SPY, but remain cognizant, obviously, of what QQQ is doing. If QQQ is dropping, and Nasdaq is dropping precipitously, and you see Microsoft is going up. That's not the case today, but let's just, for example, that's indicating something, right? There's something going on in the tech sector, but Microsoft is seemingly immune to whatever is occurring. That's important information, but you still want to use SPY as a relative strength, relative weakness indicator. Would you agree, Pete?
I do agree. And you can also see that if you compare QQQ to SPY, you can see that there are moments of relative weakness. And so when you have those moments of relative weakness, this tells me that if I'm going to be shorting, I should be favoring tech stocks. And if I'm going to be buying, I would be favoring tech stocks when I have relative strength. That's also going to bear out in the searches. If you just compared Apple or Meta to the S&P 500, you're still going to see those same stocks coming up. So I prefer to just do kind of a bottom up approach and look for that strength versus the S&P 500, look for the best stocks. And there's no need for me to have to compare it to QQQ.
Absolutely. So we got, I'll take some questions off one here, and you can maybe start to top on yours. Um, can you talk about the short that I did on AMD and the short I did on Tesla last week? Um, Look, those were, I get information through JPM, right? It's a benefit of having a very large account with JPM through Bloomberg. I communicate with them through the Bloomberg terminal and on the phone, and there's an entire desk of analysts there. Now, JPM, like any institution, can be wrong, right? They were pushing for me to go strong into ASML before earnings. They were clearly wrong on that, and I actually pushed back on it. I disagreed with them. I did not agree with their assessment on ASML, and so I just left it alone. Turned out, the next day, today, this morning, and last night, they were all like, "Oh my God, I can't believe how wrong we got it." However, they gave me information that said they believe that AMD would be a sell the news event. They from their information, and they felt that there wasn't going to be the run up had put a high bar on that event, and there wasn't going to be any announcement that was going to satisfy that bar. And they also were banking on Elon Musk not giving the timing that investors want him to give, which is that he's lost a lot of public trust in terms of the timing of his products. And so the only thing that would have satisfied investors would be to say that robotaxi would be ready within a year, right? So the moment he said 2026, that was game over. And when I get that type of information, which is not inside information, it's just information they collated through all of their analysts, and I agree with it, I share it, right? Because I don't believe it's fair that I have that information and other retail traders don't. So I share it, say, take it with a grain of salt. This is what I'm doing with it. It's not a technical trade. It's not what we do here, but it's just a benefit that I get. So I try to pass along that benefit to retail traders as well. And that's what I did with those two trades. Obviously, both worked out perfectly. And also, as did not taking ASML. And it's just a matter of also trying to, I use my own personal experience and the information I have to discern whether or not I'm going to take that information. Like with ASML, I did not take that information. So that covers that.
And
You're up.
I teach technical trading for a reason. Every single one of you can conduct technical analysis, because
right.
what we're doing is we're looking for clues of what the institutions are doing. Okay. And that bears out in price movement. When it comes to fundamental analysis, as smart as you think that you might be, you're not. Okay. So I would urge you not to do fundamental analysis, because you have large institutions. They've got satellite imaging of parking lots at shopping malls on Black Friday. They know how many freaking cars are parked there this year. They know how many cars were parked there the last year. They have all of these inroads into supply chain management. They know what component suppliers for Apple are producing. Okay, they know the granularity of every single company out there, and they spend billions of dollars getting this information. You don't have billions of dollars to spend on it. So for me personally, I just assume that I don't know anything about the company fundamentally. Of course, if an earnings release comes out, I read the earnings guidance, I read the balance sheet and the income statement, I get a feel for what the company's strength or weakness is. So, yeah, I want to be knowledgeable about it. I don't want to be blindsided, but I'm not going to pretend like I'm some fundamental analyst and some kind of guru that, oh, the market got it all wrong. That stock shouldn't have sold off. It should be rallying. Don't play that game. Just follow price action. Trust me, you'll be much better off doing so.
Okay. You have a question, I'm sure. Let's see. Once you go to the top there, you got a bunch of questions from Ram Kumar.
I did have one question for you on the challenge. That was the first question. Hey, how's the challenge going? Love to see the updated journal. Greetings from Vincent.
Yes, I saw that. Like I said, when I was posting, I have the journal obviously on the challenge. The challenge is fine right now. I said it would probably be completed by the end of October. I'm sticking to that right now. I post every single trade of the challenge, so it's not difficult for you to keep up with how the count is doing, how the trades are doing. Whenever I post a journal, I get slammed with around 20 to 30 different. Why'd you do this? What about this? How come you held there? Why didn't you hold this? Why didn't you hold that? It became such a pain in the ass. I said, look, everything's going in the journal. When the challenge is completed, I will release the journal with my thoughts, and you can go through it. And all the trades are backed up by the real-time post of them, and you can analyze the entire challenge in its entirety when it's done. It just became a complete time slog to answer every single question as to why I held this call for this much longer than that call, and so on. So at the end, you'll get the full journal and see it. But in the meantime, you can keep up with the challenge, obviously, because I do post every single trade. I'm short DJT, which obviously turned against me today, but it's a very volatile stock. I rolled my LUNR calls. LUNR is probably going to be my pick of the week. I am long SoFi. I still like SoFi, even though it's down today. I am short Tesla at the moment. It needs to break below 220. And I am long Oxy, which is going to be news dependent as we complete out this week. So we'll see how that goes.
Couldn't keep up with all those, but I will say that what Harry does in terms of even posting a trading challenge is very unique because it's real time. And as he said, it is a pain in the butt to update. And then you've also got all the other commentary. Are you still in this trade? Are you in that trade? Why did you do this? Why did you do that? So, my hat's off to you for doing it.
Oh, yeah, it's a ton of fun. um,
Especially when there's a loser. It's like, oh my God, I
oh, yeah.
followed Harry in on this trade. What was he thinking?
Oh, my God. You know what? It's fine. I can post like, I took $30 profit per share on this trade, and I'll get like, 10 likes on that and like one comment, nice job. I could post like, I took a 30-cent loss on this call option, and I'll get like a ton of comments as to why the hell did you do a stupid trade to begin with? And it is a thankless thing, but hopefully, and this kind of goes towards the question that you have here on your let me see, where was it, um, where they're talking about the typical, YouTube. Yeah, Mark W. Why these YouTube traders always come tatted up kid in his early 20s flexing rented Lambos, mansions. I don't need all that. If I could pay my bills, have a decent car and food, I'm good. And that's spot on, because one, obviously, don't trust any of those YouTube, you know, grifters out there, because it is a rented Lambo. It is, it's all marketing, right? And these people do nothing but try to sell you on some method that doesn't work. What we're trying to do is exactly what you said. We're not trying to say, hey, you could turn $500 into 10 million overnight, or you can scalp this Momo stock. Hey, we told you to buy drug yesterday when it was at 5. No, you didn't. What we're trying to do is, hey, this is a job, right? Like any other job. It just happens to be a very good job, but it's a job. It's a job that gives you complete control and the possibility for financial independence. And like any job that is worth it, it takes time, it takes effort. Think of how much time and effort you would put in at a regular company just to get up to middle management, like 5, 10 years sitting in a cubicle. What we're saying is, look, a couple of years of hard work where you're training, right? You're not going to see results right away. At the end of that, you should be prepared to have an occupation, to have a career where, you know, you have a budget where every month you're making X number of dollars, where you can count on that it's not going to be, oh, this month I lost 10,000, but this month I made 20, that it's a consistent job, consistent income. You can pay your bills, you can support a family, you can get insurance, all of that. That is the goal here. The goal isn't to get rich quick. The goal is that you have financial independence. You can be your own boss. You can work from home, work from anywhere that has a Wi-Fi, and have a dependable source of income by acquiring this skill. And it takes time, it takes effort, just like anything else does. But that's what we're trying to teach you. It's not as glamorous as the idea of take 500 and turn it into 50,000, but it is real. And so, yeah, you're not going to see rented Lambos here or anything like that. But you are going to learn an occupation, and that's what we're trying to impart.
Quick note here, I like the market. We have a support level here. This is the 5-minute chart of the S&P. You can see that we just completed a bearish 1OP cycle. You would expect the market to go down. It did not. We've been making a series of higher lows. VWAP has been able to hold. We've got a bullish cycle starting right now. I expect us to make a new high of the day very soon here while we're doing this. Along the lines of rented Lambos and YouTube videos, we're trying to help you. I don't make jack crap off of these YouTube videos. You don't have to buy a single product from me, okay? Well, Pete sells this software. Pete has a chat room. You don't have to buy any of that. Come into the live events, watch the free videos that I produce on Sundays. I'm giving you the picks, and I'm not charging you a flippin' penny, but I'm explaining to you why I like that pick. I'm giving you the market backdrop so that you can learn how to do this. I'm reviewing every single trade, just like we did today, so that you can see how they fared, good or bad. So we're just trying to teach you, period. We're not trying to bilk you for thousands of dollars. And that's what a lot of these YouTubers do is, oh, look at my car. If you sign up for my special book, I'm going to teach you exactly how to do this for only $2,000. It's just, you have to run from that stuff. SMCI was a question that I had from Chrissy, and I do like SMCI. Here's what I like about it. I like the fact that the 50-day moving average is coinciding with AVWAP-E. I like the fact that the stock has been able to poke above it. I'd like to see a little bit more strength here. I want some escape velocity from that 50-day moving average. And the way that I would get it is if I were able to move through this long red candle here. So I'm going to click GTC. I'm going to click the top of that. And now I have an alert line. And it looks like it might have been breached today, but that's kind of the level that it has to get through, that $50 level. And then, yes, I've got support here with a higher low, double bottom. So I feel that the stock does have a chance to have a nice little spurt here. Something you'd have to have in the back of your mind. TSM earnings tomorrow before the open. So we are in earnings season, and you should every single day be going through and seeing who's on deck. Do I have any stocks in that group or sector? Doesn't mean that you have to exit those positions, but you need to be aware of them, because if you're tenuously hanging on to a position, maybe it's better that you take the position off and then see how the news plays out. If you really like it, you're aware of the situation and you want to hold through those earnings announcements.
Anyone who's been following me knows that I have some PTSD concerning SMCI. The stock's been the bane of my existence. I managed to pull a profitable quarter last quarter, but no thanks to SM. So yeah, look, the stock looks good, as Pete said, on all technical fronts. You have that gap down from 827 and down to 828. And then if you just draw your trend line there, it comes in right to the top of today's high. So wait till it breaks 50. But keep in mind, there is still that accounting issue out there. I know we don't talk much about the news or fundamentals, but it is clear that everyone's waiting for that 10K to be filed on this. There is a I don't care about the Justice Department probe. They probe everybody. That sounds bad, but they do. Um, and but there is obviously some accounting issues. It's a little bit odd that they haven't answered that yet. It hasn't been rectified yet. So keep in mind any news break on that front will cause could cause an either short squeeze. And this, if any stock can short squeeze, it's SMCI because shorts have piled into this. Also, a break of 50 could start that squeeze as well. So you could be a lot of upside here. Just be careful with it. It is a news sensitive stock, and there is still unanswered news hanging out there. So there is SMCI for you. Okay, let's see. Where are we now? Keith, can we look at SMMT? Let me just take a look at SMMT. I like it. Summit Therapeutics. I mean, it's a biotech stock, so those are usually always a little crazy at times, but you got some good support here. It's obviously this thing's been above its 50 SMA ever since its parabolic move way back in May. I mean, this used to be a $3 stock. It jumped all the way up, over 200% gain that day. Then you get another gap up on September 9th. And the important thing to note when you look at these biotech stocks, you'll have these huge parabolic moves. Are they maintained, right? So the one from May 30th, that was a hell of a bull flag. I mean, look at that, perfect flagpole. And then that thing just stayed in compression from May 30th all the way through to September 6th. Then it pops again, pops up to a new all-time high of 34, begs off a little bit, but the 50 SMA holds, and now it's going back up again. I like the pick. I like the stock. It's a good mover and it's a cheap stock. So I don't know if there are options on SMMT. There are, but the IV on those options are kind of insane. So if that's one where if you really like it, then you just buy the stock.
Yeah, buy the stock. I love the price action today. Very, very steady, very, very orderly, heavy volume coming in here. So right click, create alert, trade signal, M5. Let me know when it goes on an M5 buy signal, save it, move on. Market testing almost that high of the day. So let's put an alert there so we know if we break out. I'm expecting that to happen. Boy, Spooky Castle's got like a bunch of questions in here.
Yeah.
When analyzing individual stocks, do we give any relevance to ETH levels? What's an ETH level?
You're talking about extended hours, I assume.
Okay, extended hours. I don't, Harry, you might be different on this. I know you trade after hours. I don't give a rat's ass what the stock does after hours, to be quite blunt about it. That's all fluffy, light volume, knee-jerk reaction crap as far as I'm concerned. What the stock does during normal trading hours is of interest to me.
Same here. I mean, look, obviously, if it's earnings, right, then you're paying attention to what the, all earnings moves are before or after close, and you're looking at that. But that becomes a risky proposition to trade, always to trade after the earnings release. It's very volatile. I do not look at, from a technical perspective, oh, what was the pre-market high, right? To me, there's a rarely, stocks like Nvidia, maybe there's a couple other stocks that have enough volume in there, but again, proportionally, it might look like Nvidia has it traded over 1 million shares pre-market, but compared to the day volume, it's very, very small. So generally, you're not getting, unless you're looking at an earnings or a major news release, you're not getting institutional involvement on pre or post market. And considering that's what we follow, that I don't give much credence to what retail traders are doing pre or post market on a stock.
What do we do to get better fills? Are we doing market on touch? Are we doing middle orders? I mean, it depends on what the market's doing. If I got a market that's doing this, it's choppy, it's all over the damn place. I don't have to worry or hurry to get into anything because we're not in go, go, gotta have it mode. So I'm going to treat my entries differently. I might bid. I might even put an order in below the current bid. What's the bid ask on the stock? What's the price characteristic of the stock? Is it this choppy thing that's all over the board? And I'm going to be definitely trying to wait for dips. I'm going to try and put a bid in once I start to see some levels of support. But instead of worrying about, do I buy an ask? Do I put it in at the middle? Do I try and buy a bid? I think your greatest impact will be, I mean, those are all pennies that you're trying to watch, and slippage adds up, but really be patient and wait for what you're seeing in the overall stock. And there are going to be windows of opportunity where it lines up with the market, it lines up with what the stock is doing. And I will use market orders, especially if the bid ask spread is tight and if I want to get in on that position. There are going to be other times when I'm much more passive and it's really got to come into me. Uh, so I would place greater weighting on what the overall market is doing and what the price characteristics are of the underlying stock, and then trying to determine what your overall entry strategy is versus where should I place this, at the ask, in the middle, or on the bid. Any insights on that, Harry?
Um, no, I think you covered it. I like it. Um,
And orders in and out, quick fill, middle.
yeah, I mean,
It's the same kind of thing. You have to, it's going to be based on the context of the move.
right.
What's the market doing? What's the stock doing? I will tell you that if I'm in a stock position and the stock has been going parabolic on the way up, I am going to let them reach for me and I'm going to set some very high targets. Come and get me. And I'll keep scaling out at higher levels. And if I've got something that's really gone parabolic and I have big gains, if I see a bearish engulfing candle, I am getting the hell out. I will smash every bid in sight because I am super happy with what I've made. I let it run and I want to get out. I don't want to be the last man standing when the music stops.
I mean, I will put in, I mean, there's two different ways to do it. Like, if I'm buying options, I'm going to put in the price I want, right? If I don't get it, I don't get it, right? Unless I very rarely want to chase. So I'm just going to put in the price I want. If I really want it, I'll put in the mid, right? If I want it right there, I'll put in the mid and go for that. I rarely will put in the ask, but usually I'll put in a price below the mid, hope for a pullback, see if I grab it. Sometimes I'll put it in and just, earlier on, and if I get that pullback, it'll trigger. So if I'm buying stock, I'm generally doing it through JPM, and they'll just get me the best price. So it's a little bit different there. If I'm like, give me 50,000 shares of Tesla, they're going to go in and grab it for me at a good price. I don't have to tell them, get it at the bid, or here's the limit, or do a market order. They just know to go in and get it for me at the price that, is the best price that they can get it. And usually they do a good job. But yeah, I mean, look, don't chase. If you're doing options, look at, okay, this is the price I want. It's the bid is $5, the ask is 530. Could you get it at 515? Probably, but put it in at 5. See if it clicks. Now, if the thing is just running up, like Pete said, you got to look at the price action to see if you want to adjust that. Chances are, if you wait long enough, you'll get a nice pullback and be able to get your price. If you miss it, you miss it. But getting filled on these things 15, 30 cents higher than you should can sometimes mean all the difference between whether or not your average trade is profitable or not.
Diego, you just stumbled across this, and oh my God, people are teaching without charging thousands of dollars. Welcome aboard. We do this every Wednesday. And how can you get a link to my Sunday video recordings? It's right on my YouTube channel, oneoption.com. You can see everything is dated on the thumbnail, so you can go back and see previous Sunday videos, subscribe to the channel, and then you'll be notified. Make sure you turn on your notifications You'll be notified when the Sunday video comes out.
Okay. Also, Spooky Castle, you guys teach market first. Curious if you take the approach of the market ETF basket stock, meaning SPY trend is up, do you ideally want to see the sector also trending up in support of taking a swing? It might be dampening to go long or short stock when the basket is trending against you. PS Pete, I've been reading your course, took a nice short yesterday using your teachings. Cheers. I'm glad that you were able to use the teachings that Pete put out there. To answer your question, I'm always cognizant of what the sector is doing, certainly, but it becomes sort of this question, right? For example, you park your car, right, and then you think, shit, do I have a ticket? Did I get a parking ticket? Maybe I should go check. Then think about it. Why bother checking, right? Because if you check and there's no ticket on it, you're going to leave the car there, right? Oh, I didn't get a ticket. I'm good. If you check and there is a ticket on it, you're going to leave the car there because, well, fuck, I already got a ticket. I might as well just leave it where it is. In the sense of checking the sector, all right, you're bullish on a stock. It's relatively strong against SPY. I'm not saying don't check it, but just follow along. And the stock is strong. You check the sector, and the sector is down. Okay, well, that's not a bad thing. That tells you that the sector is down, but the stock is strong, right? So there's institutions in there buying this tech stock, for example, while the entire tech sector is down. That tells you there is a specific reason institutions are in there. You want to follow that. Let's say the sector is up and the stock is strong. It's relatively strong to SPY. Also good news, right? So no matter what the sector is doing, if it's relatively strong to SPY and you like the price action and you look at the D1 and it's a bullish chart, well, that's a stock you want to do. But just, obviously, if the sector is strong, weak, and the stock is strong, that, for me, that's when I'll generally take a deeper dive to see, is there something going on that is causing that? But still, I'm going to rely on the price action and I'm going to rely on the relative strength to SPY.
I'm going to go back to SMCI and show you a tell on that stock. And the tell came yesterday. So here's what the stock did yesterday. Opened flat and it had this sell-off here and then another sell-off and it made a higher low. And then it just kind of compressed all day, but it did make a series of higher lows. Okay, so big deal. What's that got to do with anything? I don't see anything there. It's choppy all over the damn place. Well, that's when you have to overlay the S&P 500. And that's when you go, oh, market sold off all day long. And this stock made higher lows. That's a sign that there's some buyers out there, especially when this is chip related and you have a stock like ASML that is being taken behind the wood shop, the woodshed. All right, so big sell-off
Get
in
their ass
tech
kicked behind the
stocks.
wood shop too.
I'm sorry.
People get their ass kicked behind the wood shop too, not just the shed.
Okay. So anyway, that's a little tell that the stock wants to move higher. But Harry made a great point earlier. There's some pretty big news surrounding this stock. All it's going to take is that, oh, hey, the Department of Justice investigation, it's yielding some pretty nasty stuff. These folks have not been very honest, and you will see what looks like a great, fantastic little stock just chugging higher, get the rug pulled out, and you get a $20 drop and you go, so much for my technicals. You got to be aware of things that are going on like that. So SMCI, I would be only trading it short term, swing trades. You can use some call debit spreads, limit your downside risk. That's how I would be approaching it. But that was the tell that I wanted to show you. I showed you a similar one in SNOW a week ago.
Hey, could you look at META and MBLY? Let's start with MBLY. MBLY, I see why you like it, right? Everyone likes these lower right-hand corner stocks. It's at $12. This stock used to be at $43. It's starting to recover. What if I get in now? I can do a 3X on this stock. Yeah, okay, great. You see that little line there? It's called the SMA 50. Ever since July 1st, you see the stock, it pushed against it. Nope. Then on July 19th, starts its drop, continues to start to drop, continues to start to drop. Obviously, the SMA drops with it. Oh, but wait, then on September 27th, well, let's try to break that SMA. Fuck no, doesn't break it, right? Dropping again. Then again on October 11th, let's break it. Nope. 14th, break it. Nope. 15th, should we break it now? Nah, we're going to drop again. We're going to try to break it, touch it, nope, drop. Now today, once again, it's at $12.30. That SMA is at $13.19. Do you want to play for the 89 cents of it trying to get back up there and test it again? Maybe. Not worth it to me. It's just, it is not enough upside here when you have a lot of downside. It breaks the 50 SMA, then you're talking. So put an alert in at 10 cents above the SMA, 13.20, whatever. And if you get that alert goes off, take a look at it, take a look at the market, and then decide on the stock. But don't do it now. And then Meta. Meta is falling off here, but Meta's had a hell of a run up. It's at 575. It right now is off another $11 today. This is a stock where if you were going to short it, and it's a risky short, but you do have enough downside because the SMA 50, that's their next level of real support, is at 543. And it has broken an upward sloping trend line coming off the bottom of 919. So it did break that today. It also broke the 15 SMA. So there are enough bearish sentiment, bearish movement on the chart. This is something where I would use a put debit spread. I would do something like a 575, 570 put debit spread. Expires Friday. You can get that right now for maybe $1.95. You want it to be under 250 if you're getting a $5 spread on a debit spread, and go with that. So if you were to play Meta, to me it would be a short. It would be a 575, 570 put debit spread, and just watch it closely. Make sure it expires this Friday. Any thoughts on those two?
Yes, I got some thoughts on shorting stocks that are in an uptrend. And so you can look at similar periods like this one right here, and you go, ooh, 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 look at this compression. Ooh, oh, hey, Meta just broke down through that compression. This is a good level to short in. So now you put the trade on. In this instance, you've got a lot of moving averages, which you don't have right here. So that's one thing that's good. You guys covered that. So that's a good thing because it's got lots of room to drop in there. But you can see how choppy that move lower is. This move actually had one thing going for it that this one doesn't. And that's that during this time period, you had a market that was also weak. So the market was helping to fuel that move lower. And this time, Meta would have to fall all on its own. So, yeah, if you do a call or a put debit spread, then you're going to limit your risk, but you need that immediate follow through. And tomorrow is going to be kind of an interesting window. I want to talk about it a little bit because we're in a bit of a news vacuum right now. We don't have a lot of economic data points coming out. So the news is light that way. We've got earnings season just starting to unfold. Banks have dominated the scene. So then all of a sudden you get this little kind of window where you get a number of different news items that are going to be hitting at the same time. One of them is the TSM earnings. Okay, is TSM going to confirm what we learned from ASML yesterday? If their results are much weaker than expected, it could really weigh on tech stocks. We have retail sales coming out. That's going to have implications for the retail sector. How healthy is the consumer? Then the third piece of news that we have coming out tomorrow, which I think is actually going to be pretty important, initial jobless claims. Typically not a big number to watch, but last week it came in at 258,000. That was a pretty substantial spike of about 30,000. Was it related to the hurricanes that have been wreaking havoc? We don't know. It was a one-off number. What is that number going to look like tomorrow? And if it comes in north of 250,000, I think it's going to start to raise some eyebrows. So there might be an opportunity tonight to buy a straddle or a strangle on SPY overnight, looking for some type of move out of this fairly tight compression. So it's a little window where we've got a number of news events happening at the same time. And I think it's going to create a move one way or the other.
I agree. I think a SPY straddle might actually be, and if you take a look, remember with straddles, what you're saying with a straddle, right? What you're essentially doing is you're saying the market maker is wrong, right? That's what it comes down to, right? Because the market maker has priced in a certain move, right? So let's say on SPY, and you want to do a straddle here and you do it just expiring tomorrow. It's a binary event. Is it going to go up or down? And so if you look at the current 580 puts and calls, and you again there, so you're looking at a on October 17th, and you buy the 580 call, you buy the 580 put, you get that for $3.26. So what you're basically saying here is the market makers are saying this market is going to move $3.25 up or down, right? And in fact, the calls are more expensive than the puts. Almost no IV here, so 12% IV, very low IV. So they're cheap options to buy. That's when you'd want to buy a straddle. So then it becomes a question of, is this going to move the market more than $3 in either direction? If it does, your straddle is going to pay off. If it doesn't, it won't. And so just always keep in mind with straddle, that's what you're doing. You're saying the market makers have underpriced a move here, and I'm going to take advantage of that by buying both the puts and calls, and hoping that the stock or the ETF goes beyond the move that the market makers are projecting. Market makers are good at their job. So to do a straddle, particularly a strangle, you have to be, you have to have a good reason behind it. A jobs number like this probably will have a decent impact, and the IV is low enough. I like the straddle.
Yeah, last week we even saw a little bit of a negative reaction on Thursday morning when the initial jobless claims number came out. Everybody went, "Oh, that's different." So yeah, we'll see what happens. I am not going to be around, so I won't be trading it, but I think that's a kind of an interesting trade. And
Mhm.
let's take a little break here and bring up LUNR because I know you like that stock and so do I.
I was going to make it
And
my
so
pick of the
that's
week if you weren't.
no, I'm gonna let you take that as your pick of the week. I've got another one that actually I got a few that set up well. So I've got the chart up. Why don't you tell us what you're looking at and why you like it?
I love this one. LUNR. Um, you have this, LUNR go back. So the first, what you want to do is go back to August 19th, right? And like I said earlier, what you're looking for with these type of stocks, and by these I mean cheaper stocks, that are having these bigger moves, you get this gap up on August 20th. Is that gap up maintained? It gapped up through the 200 and 100 SMAs. So instant support is formed. And yes, it is maintained and held in a nice compression all the way up to September 18th, where September 17th, and then September 18th, it gaps up again. Same pattern. It is holding that gap up, right? It is doing a great job staying above the EMA 15, dips it below it for 2 days on the 9th and the 10th of October. And then it's now starting once again its nice, steady upward trend. This is a stock that is meticulously going up in a very, it's not parabolic. It's making its gap ups, it's holding them, and then it's going up again, holding them again. This is the type of pattern I like. I like this type of movement here. You don't have much resistance here above, so I am very bullish on LUNR, cheap stock. You can buy the stock, obviously. You can buy the options. You can almost buy the options at parity. So either one, I think, is a good play to go long on this stock.
When you get a big gap up like this, the first thing you should do is I'm not a fundamental analyst, but I should know what's driving the stock. And you bring it up and you go, oh, these guys are making lunar landing equipment and they got a $5 billion contract from NASA. Ooh, could that change the company? Could it give it credence and legitimacy? Yeah, that's a pretty good news item. So you would go, all right, well, this is nice. I don't have to chase it. But yes, as support is confirmed, and this is a VWAP E, all right, number of bounces and starting to move higher. I like that. I think that's it's going to be a good pick. Let's take a look at the 5 minute. And so, yes, you've got this run up. You don't need to chase it. The market's not doing a whole lot of anything, although it is making a new high of the day. Okay, I just got that alert. So you don't need to chase anything in here. Hey, looky here. I got to pull back to VWAP, and now I'm back above it with the market making a new high of the day. This is a nice entry point.
Absolutely. Um, and this is the type of analysis you should do on all, obviously you're suggesting stocks. We have a great, like 95% track record on the stocks you suggest, but do your own analysis on it. Look at why we're suggesting the stock. We're laying it out for you. But when you see a pattern like we just showed you, and Pete just showed you on the 5 minute, and I was showing you on the daily, recognize that pattern. And you should be journaling your trades, right? So if you're journaling a trade like LUNR, you would put in that pattern, right? You'd be, gap up, hold the gap up, hold the gap, strong to the market, bought it above VWAP. You put all that information in there. So the next time you see a similar pattern, you can start to go back and say, how has this worked out before? This type of pattern, how is this, done for me before? And over time, you're like, oh, I've done this trade 12 times in the past year, and 10 out of the 12 times it has worked. This technical pattern has resulted in a nice bullish move. That type of journaling, that type of recognizing the patterns over time gives you a lot more confidence in your trades, to hold your trades, to stay in the trades, all of that. We did have by the way, a question in the chat room from Chi. I need some life advice that I think is relatable to trading. I have a rather consistent, busy, scheduled lifestyle. And when a wrench gets thrown in sporadically, I feel it lingers on my mind and drags my performance down. These setbacks are beyond my control, yet I feel it's a heavy mental burden. Also, these setbacks have made me realize that I live in a very fast-paced world I can't afford to break. How should I approach such setbacks in life and or trading? There's a general rule, right? And it's a difficult idea to wrap around. There are certain things in life you want to have your emotions guide you, right? Certainly in areas of love, right? Or your children or friendship. You don't want to be looking at that in the cold light of day of pure logic and stats and all of that. You want to be guided by your gut and by your instinct and by your emotions. And clearly, even there's a line, right? I mean, if you get angry, you get upset, you don't want to burn a bridge. You don't, you have to keep certain things controlled. But there are other areas in your life where your emotions are going to work against you. And the question becomes, what is your emotions adding here, right? Are they adding insight? Are they adding anything that's going to give you an advantage? Because when you're talking about your financial life, when you're talking about work, when you're talking about things you have to get done, anything that's going to impact your day-to-day living, it's all about a cost-benefit analysis, right? It's all about, is this decision going to be a net benefit to me or a net loss? Is there going to be an advantage to me? And how can I make a decision that has the best likelihood of working out in my favor? So thinking about it like that, right? How well do you think your emotions can help you guide the calculus of that decision? It's going to throw it off, right? A lot of people say I had a bad day. And when I have a bad day, I trade badly. That is indicative of a symptom of a larger issue. And that issue is that you're looking at it at the extremes, right? And obviously on the extremes, the answer is simple, right? If you have a bad day, just don't trade that day, right? If you're having a great day, don't trade, either way. If you're on the extremes, don't stay away from anything that it can impact your decision. But if your decisions are that sensitive to your emotions, then it's also sensitive in the middle. It's just less detectable. And that means when you are, you just took a big loss, you're going to be more likely to maybe make a rash decision to try to get it all back right then. I think it was Winston Churchill who said, the best way to get yourself out of a hole is to stop digging, right? And your emotions will tell you to keep digging. So what you have to train yourself, both in life and in this, is to differentiate where your emotions should be applied. And I get it, they're emotions, which means by their nature, they're hard to control. But that is exactly what you have to do. The most successful people I know have great control over their emotions, meaning their emotions don't guide their decisions. Their decisions are based on a very cold calculus of, is this the best decision? Is this not? Let me take stock of where I am. The more you can drain your emotions out of your trading and base it on what you see and what you're dealing with in front of you and the patterns and the price action and all that you learned, the better you're going to be. So it really is a question of emotional management than anything else.
And one of the keys to that is that uh, you start very, very slowly. If you're learning how to box, you're not going to go into a ring with somebody who has been boxing for a long time with no headgear on. You're going to go in and you're going to learn how to spar. You're going to learn the basics. There's going to be some mistakes. You don't want to keep getting hit in the head 100 different times, and you're going to have very low level of confidence because you don't know what you're doing. So during those early phases, what you want to do is one share of stock. And it sounds so stupid. I can't even make any money. This isn't even worth my time. You're going to make a lot of mistakes, but what you're going to do is you're going to improve your success rate over time. Your knowledge is going to grow so that when you get to the point to where you're very proficient at it, your emotions will not come into play, because on one share, you don't have any emotions. I don't give a rat's ass if the stock goes to zero. It's not going to mean anything material to me overall. But what that's going to do is you're going to start learning some really good behaviors. You're going to learn from your trade journals and your trade logs. You're going to get that track record and that win rate up to where once you're above that magic 75% win rate, now all of a sudden you're not afraid when you take a trade because you're expecting positive results, because you've gotten to the point to where you recognize good trades from bad trades. And so you won't even think twice about it. So it's very important to put the time in and to remove emotion that way.
Next question here. Well, a quick one here. Would you ever consider fading, shorting a move such as biotech, WVE? It seems like a potential good risk reward. It's a terrible good risk reward, because let's say you short this parabolic move here. It's at 1474, right? You have no evidence to support that, right? So you're shorting it based on a preposition that it's gone up so much, it's got to go down. So that is your logic behind the trade. Your logic behind the trade is telling you it's gone up so much, it's got to retrace. Okay. The problem there is that as the trade, if the trade moves against you, all it's doing is reinforcing the faulty logic. Because let's say that stock continues to go up. The same logic you're used to get in the trade now says, well, now it's definitely got to retrace. It's even higher. And a lot of times you'll average down, you'll short even more because, well, now it's gone up, it can't sustain this. So when you go in with faulty logic, you can't exit, because you're when the trade turns against you, it just starts to confirm that logic even more, that now it's even more primed to go down. So that becomes the problem with shorting or going longer, doing anything without the evidence to back it up. That means your exit of when you know this is a wrong trade is also not going to be evidence-based. And so at what point do you say, and then it becomes just a matter of pain point. I've lost too much, I'm getting out. And that's usually when you go, oh, great, now it went down, right? So it's not a good idea to do those decisions based on this gut feeling without evidence, because then you have nothing to base your trade management on.
Agree. And even if you thought that you knew the fundamentals of the company, for instance, GameStop. Ah, Jesus, there is no way that GameStop should be trading at $100. Oh, there's really no way it should be trading at $150. $200. Are you kidding me? This is such an incredible short. And what happens is that you don't have the staying power. You have to shut that trade down. And so you have a massive short squeeze that feeds on itself because everybody that shorted it, as the stock goes higher, they're forced to cover it because of margin calls. You just don't have the staying power. So no, I would definitely avoid shorting biotech stocks. You don't know what the technology is or what they've discovered or what valuation the company should be at. In this case, I look at this and it tells me that it's been able to hold all the gains for the day. So with every seller that's out there, whap, 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 selling it, that supply is getting soaked up. And there are buyers right now. So just on the technicals, nothing else, just based on what I see today, tells me that there are buyers in this stock. I certainly would not be shorting it here. Most of you shouldn't even be considering a strategy like that.
On the
I do
positive
want to
side,
get,
biotechs can help with your staying power if that's your problem.
I do want to get into my pick of the day. We're starting to get pretty late here. I like LULU. So Lulu, what do I like about it? You can see on the daily chart, let's zoom out a bit and get a little better look at what's going on here. I like the fact that the stock has been able to make a series of higher lows. So it's got a nice little uptrend here. It's been able to get through horizontal resistance.
Well,
This is this is a lower right-hand corner, which normally we're upper right-hand corner. We like to buy breakouts and we like trend strength. The difference here is that we've had time for the stock to form support. And in fact, it's been in such a long-term downtrend that all the major moving averages have fallen. So it's above the 50, it's above AVWAP-E, it's above the 100-day moving average, it's through horizontal resistance. It looks good. Retail sales tomorrow, if consumers look like they're fairly healthy heading into the holiday season, I think apparel is going to do well. I've also noticed a couple of other apparel stocks like Nike. Nike made a good move today. That's actually looking like it's in a gap. So it's trying to get into this gap right here. It is above the 100-day moving average. I don't like this nearly as much. So do not trade that. ANF also looked like it was gaining some traction. Compression here, big bounce through the 100-day moving average, downward sloping trend lines, cleared that. ANF looks pretty good, but I like Lulu better because it's not as far out of the gate and it's coming off of a major support level. So that's why I like it better.
I love Lulu. It's a great pick. I might go along with that myself. It's a great one. Maybe I'll just run through a bunch of these real fast because we are running out of time. So have you looked into Hood with all the recent expansions, partnerships with major banks? I could care less about what they're doing and their expansions. I care more about their price action. Their price action is good. They are in a compression right now. So I would just put an alert at 27.50 at 17 cents higher than the high of 10.15, right? So that's what I would be looking at to see if it could break through the 10.15 high of 27.33. So I would put it in at 27.50, put an alert there. And if it triggers, then you might be looking at a good long. Can you properly explain how to leg out of option spreads? That's probably a longer conversation. Then we have, you only want to leg out of option spreads if you think you can maximize your profit. And by that, you buy back the short option, which you feel is going to work against you. So let's just say you buy the short, you sold the short call for $2, you bought the long call for $4, the whole thing cost you $2 to do the spread. And then it's 2 days later and the short call is now 30 cents, right? Well, you can buy back the short call if you have reason to believe that this stock is still going to drop. And now you feel it might actually drop below the price, the strike of your short call, right? So you don't want your short call to hamper you anymore. It did its job. It mitigated the cost of the long call. There's only 30 cents left in it. You buy it back because you feel that you can maximize a larger drop here. If you feel that the stock might drop but will not go below where your short call is, then there's no sense buying it back and legging out of your option spread. And
I,
yep, yeah,
I was just going to say, so you're speaking specifically to debit spreads, okay, where you are trading directionally and you have finite risk, okay, because you are buying back your short call. In credit spreads, in particular, bullish put spreads, put credit spreads. I have an entire video on legging out of spreads. Very, very different situation because in that situation, you are actually buying back your short because you've had an adverse move against you. And now your position has flipped completely from being neutral to slightly bullish to now all of a sudden you are flat out as bearish as possible. There are times that you can do it, but it is a very difficult maneuver. That's why I spent an hour doing a video on it. Again, it's on my YouTube channel. You'll have to search for legging out of spreads.
okay, real quick, MA and Docu, Luca, you always have great picks, so this is no exception here. These are great picks. MA and Docu are both great longs. The charts are self-explanatory. Love them. I like the way they're both set up. PLTR has had a hell of a run up. It is now, begging off a little bit. That EMA 15 is holding, but is still down for today. I would hold off on PLTR right now. Someone has a bullish put spread on Microsoft that expires Friday, 4/10, 4/15. I'd be careful on that one. I don't know if you disagree, Pete, but if you're in profit on that bullish put spread right now, I would take it. Microsoft has been very bearish at the moment. That support's still holding. You're still above your long put, but at your short put. But at the moment, I would, if you have profit on that, I would consider taking it, particularly with some, as Pete said, tech earning tomorrow morning that could impact the stock. So, would you agree? Would you take profit on Microsoft bullish put spread 4/10, 4/15 expiring Friday right now?
100% agree with you for exactly those reasons. It's ducked below that 200-day moving average. You got big news tomorrow. If TSM comes out and the news is negative, it's going to weigh on all tech stocks, Microsoft included, and you're going to be in trouble on that one.
100%. Tesla, I already talked about. How many contracts of an option can you buy that have zero volume before you have trouble exiting? Look at the bid-ask spread. The wider the bid-ask spread, the more difficult. You can always exit. Market makers will fill your order. It's just a matter of how bad the order is going to get filled. If you have a huge bid-ask spread, obviously credit spreads, debit spreads are the way to mitigate against bid-ask spreads. But keep in mind that when you have those big bid-ask spreads, which you can have when you have low volume on the options or high IV, you're going to have trouble exiting. So, it's just a matter of looking at the big ask spread and waiting for it to get a little bit tighter. And then another great pick. We got a lot of great picks coming in. SMR, obviously, Nuclear Power Corp. That's a good pick right now. The news coming out of Amazon helping that stock. It's at 1789 and powering up. Get it? But you do have. It's actually at an all-time high now. I love stocks at an all-time high. There are no bag holders above this level. So, it's a hell of a move. It might retrace a little bit, but I do like SMR.
Yep, agreed. That's a nice breakout there. I really like that MA chart also. That was a really nice one. And you can see the strength today. And I think Visa was also looking pretty good. Going to be impacted also by retail sales. Obviously, retail sales come in pretty good tomorrow, which my gauge for retail sales that I really like to look at is I love to see what MasterCard and Visa are posting in terms of their year-over-year gains as a gauge of retail sales. But yes, retail sales coming out tomorrow. If they're good, the stock is going to continue to push higher. So that would be a reason to maybe buy it today if you like this breakout, or you may want to be cautious and wait for that number to come out and then take the position.
Two more questions on mine. Where would resistance on Cisco be? Yes, it would be at 58.20, the previous high. And there's also horizontal resistance there, but Cisco certainly looks good. And if you wanted to short Tesla, would ARK be a cheaper way to short it? ARK just doesn't go anywhere. You know, I mean, if you want short Tesla, right? Just be careful. That, I mean, I am short Tesla right now, but obviously you have the 100 SMA right below. Tesla's been consolidating, not moving much. But if it breaks 217.87, Tesla could really drop. So just you know, if you want to be conservative about it, obviously put your alert right there at that SMA, and if it breaks it, then you are good. And I'm sure, I think you still have a lot of questions on yours, but I know you have a flight there, Pete.
I do have a flight to catch. I am going to be going to Tulsa to an Oktoberfest. I have heard that they do it upright, so I'm looking forward to it. And I will not be doing a Sunday video. I will be back Monday midday.
Okay. I know there are some other questions like, how do I deal with a stock looking great one day but terrible the next, especially in a small account with PDD rules? I mean, look, this is why knowing and paying attention to the daily chart is so important. This is what I pointed out earlier when I was talking about why I liked Apple last week, because you had that support right under it, right? And what that does, even particularly for smaller accounts, is it gives you a stop, a loss area that isn't too severe, right? So, okay, I took the loss here, but this was only $1 away. And if it breaks there, you have a very clear break of support. You can get out, but you know, I like that bounce there because you have a lot more upside. So, you know, a good way to do it is to look for those type of trades where, you know, you're not looking at, oh my God, this is a huge drop today, but it's still above support. So looking at the technicals, I shouldn't get out. Try to take trades if you're really that concerned with that type of issue that have support levels that are closer by.
All right, you've got LUNR for your pick of the week. I have LU for my pick of the week. And both stocks look good. Watch the numbers coming out tomorrow. I think we could get a little bit of a market reaction. So should be a good trading day tomorrow. Apart from that, we will see you next Wednesday. Trade well, everybody.
Absolutely. And if we didn't get to any of your questions and you're in the One Option chat room, post them in there. I'll be in there all week and I will get to them one by one. All right, everyone. Have a good week.
Thanks. Bye now.